Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst. In this video, we're going to check in on the markets that continue to keep bear control. In the video yesterday, I talked about looking for a bounce today, but I was wrong for the first time in my trading career. And we'll go over the in-depth trade review and an example of the ideal way to be wrong in terms of being protective, playing counter that short-term momentum. Let's get to it. So checking in on the broader market, we have bear continuation. And today was a notable day for me as far as shifting probabilities, where now we've got space for weekly lower highs to be the result of the next bounce. And we're still at a point right now where if we look at retracement sizes from the summer move, we are approaching 50% retracement in the S&P 500. And on the NASDAQ, we are at just under 382. But again, once you get down towards 50% retracement, then you create that space for the lower high. And so we are going from euphoria to fear fairly quickly. Markets love to do that in both directions. And the next time we bounce, we have the space where, let's just say this is the bottom. There's no sign of the bottom right now, but if this were the bottom, we could bounce 4% and still just form a weekly lower high. So the next step for the bears have been checking off the list in terms of seeing what they want. Step one, confirm a daily downtrend for the first time in 3 months. That started this all. And the bears have kept control since then, as we've now seen our lead bulls join Team Bear. Amazon with that break yesterday. We're going to see if the healthcare sector is going to join as well. But if we confirm weekly downtrends from here into the end of the year, after the next bounce, we're going to shape up for the possibility of a very boring 2024. And what that would look like would be a potential equilibrium, where you've got your massive breakout, your big pullback, your lower high. We would look for a longer term higher low compared to the fear lows and just tighten up for a lot of months. And what would that look like on the monthly? Well, let's say the bears confirm a weekly downtrend. Let's say we retrace a bunch. Then we bounce on the monthly for a monthly lower high. I mean, next thing you know, we're talking 4 months into the future. So something to keep in mind. And the next big check mark for the bears is confirming the weekly downtrend. But it's definitely a win this week for giving themselves the space and potentially losing weekly EMA 12, which was the next guide for me in terms of determining, is this consolidation healthy or is this something more than healthy? And as of right now, this is something more than healthy. And so the bears getting a big win this week. As far as the short term, you're just sticking with the 4-hour EMA 12 as a guide on the futures chart. S&P 500 and the NASDAQ both yesterday afternoon rejected from it, or actually that was yesterday morning. Yeah, yesterday morning rejected from it. Bears controlled the day, and then this morning rejected from it. Bears controlling the day. If you're looking at the ETFs, just SPY hourly downtrend. So SPY, we had the hourly lower high yesterday, 443.09. This morning, just lower highs. So bears are keeping the short-term momentum in their favor, and we're not too oversold right now. And actually, we're not that oversold at all. You know, you look at the 4-hour RSI on the S&P 500, it is just getting oversold, not at extremes. The daily is not oversold yet. We're approaching it. The hourly is oversold, but we've seen plenty of hourly oversold drops. Cool it off in extended hours with a little bounce, just setting a lower high. So we're not at extremes for the broader market as a whole. As I talked about yesterday, we are at extremes on some individual names, but the broader market is not at extremes. So we got to keep that in mind. The NASDAQ on the 4-hour, just getting to oversold conditions as well. And again, daily chart also heading towards oversold, not there quite yet. Also got to keep in mind, next time we bounce on the daily, which is what I was looking for in the short term, we will just be watching for the possibility that that bounce results in a daily lower high again, as the last couple attempts have. We can bounce 2% and still be under daily EMA 12 resistance. So bears gaining some momentum after the euphoria. And now it's all about the longer term time frames. Can they confirm the weekly downtrend once this initial wave of fear subsides? And that's going to we're going to get an answer to that probably in September. But one day at a time. So now we'll do a quick trade review before we get to the rest of the sectors and things like that. And, you know, it's the kind of thing where by putting myself out there, the life of a YouTuber or social media, I know it's the minority of people, but, you know, if I'm wrong, keep in mind, as a full-time trader, I am wrong literally every single week. I'm wrong at a minimum, if not every day. Definitely not every day, but every week I'm wrong about something. And the thing that separates a professional trader from a hobbyist is, how are you wrong? What does that look like? And so I'm going to show you the ideal way to be wrong, which is protecting yourself and using partial positions. And I'm going to go fairly in depth to this trade review. But it's the kind of thing where, you know, I can be right about things for a long time and nobody sends me a message, and then being wrong, you know, like this, I get 5 messages on all the different social media saying, yeah, whatever. And it's just, you got to anticipate that people are just going to stop sharing their opinions. If you get nothing when you're right, nailing the regional bank bottom, nailing the rotation to growth, bullish all summer, and then people come out of the woodwork when you're wrong once, it's definitely frustrating. But again, I know it's not the vast majority of people, and that's just the way that it goes. So comes with the territory. So Riot. So first off, I was looking at Tesla and Riot I talked about in the video yesterday. What did I say was the ideal scenario? I want Tesla to gap down. It didn't gap down. Lay out your ideal scenario for the trade in advance so you know if it's ideal or not. What do you do with that information? If you get the ideal setup, you go aggressive. If you don't go aggressive. You use a smaller position size or you don't take the trade. And so I didn't trade Tesla long today. I didn't trade Tesla at all today because it didn't give me the setup that I wanted. I wanted Tesla to gap down open, and it didn't. And so we saw weakness on the morning. We bounced, had a 15-minute equilibrium. We broke bear on that equilibrium. The bears controlled the day, and they're controlling after hours. And so Tesla is not finding a bottom, and I'm still going to be watching for a gap down to try and find that temporary bottom now that we're in daily oversold conditions, and it might present itself tomorrow. And maybe I'll try tomorrow. And you also have to keep in mind that one of my edges as a trader is oversold bounces, and that's always been that way. And I've got a decade of trade results to show me that. If you don't have that edge, you can be practicing, but you'd want to be cautious because it's a tricky trading style. And I got plenty of videos on YouTube about it, how I trade crypto breakdowns. Go through our YouTube channels, and there are videos about how I play oversold bounces. But in today's example, Riot. So we're going to look at orders and everything. So I was heading into this morning, and I was on a YouTube call. And so I missed the open, the first 30 minutes of trading or so. And so I was a little bit patient, but I also wanted to grab a little piece, knowing I was going to be distracted on the morning. And so we got the gap down open, which I wanted on Riot. And we got Bitcoin. The Bitcoin setup was key for me as well in establishing this trade game plan. And what I wanted to see is what Bitcoin has done many times for those that trade it, which is get to an extreme short-term RSI level, mid-term RSI level, 4-hour in this instance, and then you break the low and V-shape. And that marks the start of the oversold bounce. And so I was looking at that essentially on the hourly today, where we started the morning, and I was looking for a break of 28.3 thousand with no follow-through to mark a temporary bottom. And so that's a key aspect of this trade because, again, I'm laying out everything that I need to see. And if there's every puzzle piece and it's full systems go, I get a Riot gap down, I get a Bitcoin break of 28.3 with 0 follow-through into a V-shape, I get the NASDAQ getting a more convincing bounce going, and I get the dollar giving me more signs of the top. Those are the 4 things, the 4 components of what I need to see for the stars to align on this trade. And anything less than that is not the ideal setup for this trade to play out. So I got 1 check mark, Riot gap down open. All right, so I make an initial entry for a partial position size. This is just getting my toe in because I'm a bit distracted in the morning. If the bounce gets going right away, I want to have a piece of it. And so I'm in 5,000 shares at 12.51, we'll call it. And then I say, all right, now I'm real patient because we double topped at the high of the day. We failed to break the high of the day by 1 penny, and we broke a new low. So that tells me, all right, be patient. And at that point, Bitcoin had not given me my next check mark of what I need to see, which is a bear break of 28.3 with 0 follow through. So I'm waiting. I know I'm going to add another position. I'm waiting for that. And I'm waiting for that signal to make another entry. And I will be more aggressive if I get that setup, if Bitcoin gives it to me. And it did temporarily. And so we break 28.3, and then we get that V-shaped move. And what that looks like on the 1-minute time frame is just a complete reversal candle. It's only a 1 minute candle, but you drop down, you bounce up significantly, and then you get to the highest level that you've seen in the last couple of hours. And oftentimes that will then lead to the 4-hour oversold bounce. It's the highest price in about 2 hours from the bear break into the move. And again, Bitcoin does this all the time. So, all right, that's another little check mark. And so with that information of I just watched Bitcoin break bear and V-shaped bounce, my market buy is ready to go. My finger's on the trigger. I see that 1 minute candle on Bitcoin, and I market buy Riot 10,000 shares at 12.19. So now I'm in a full position, and I view it as ammo. If I've got a gun and I've got 3 bullets, I've just used up my 3 bullets. Now my criteria, or my top priority, is selling out partial into any kind of bounce to, number 1, lower my cost basis to stay in control of the trade, and number 2, to give me ammo back. Because if 15,000 shares is all I'm willing to take on this trade, if I'm in that position, I now place my stop. So I didn't have a stop in place for the first position because I knew I was going to scale in more. As soon as I market by 12.19, if we keep dropping, I'm going to stop out the whole position probably around 12.10 or so and just eat that loss and be wrong. But fortunately, that move on Bitcoin led to a temporary bottom here where it was right here. And we'll go to the 1 minute time frame just to stay consistent. So it was right here is where Bitcoin broke support and then V-shaped. And so I'm in at 12.19. I market buy and I got filled on this 1 minute candle, which shows you I'm staring at the screen with my finger on the trigger. And so the bounce got going right away. I didn't really have to worry about anything. That added position was green right away. And so what I do from there is scale out. Same thing as Tesla yesterday. So Tesla, I played the bounce and it went well on the morning. And I exited the whole trade because my mindset was this is just a day trade. I'm playing counter trend. I'm locking it in. This setup today was this is a day trade at the moment, but I want to transition this to a swing trade because I'm playing for a 4-hour oversold bounce and I want to try and swing trade this position if we can get a convincing temporary bottom set. And so on Riot, we get this bounce going and I want my ammo back and I want a better cost basis because with that entry, let's see, I've got 2 positions at 12.19, 1 position at 12.50. That means about 12.30 is my break even. So we get above my break even and I'm out of ammo. Give me my ammo back. I sell a third at 12.38. I sell a third at 12.36. So I just exited at an average of 12.37, which means on 2/3 of that position, I just gained 7 cents from my average, which means dropping down, essentially we can say, I gained 18 cents on 2/3 of the position, which means I gained 30, I can knock off 36 cents from the remaining third position, which means instead of a 12.51 average, it's now a 12.15 average. And the low of the day at that point on Riot is 12.14. So my break even is at the low of the day. And this is either going to be the bottom I'm looking for the Bitcoin V-shape bounce, or I'm going to be wrong. And so I'm now in the driver's seat of this trade. It took a little finagling. This is why I do partial positions, but I'm in full control. I don't have anything to worry about. Now my stop goes under the low of the day. I chose 12.10. I treated it as break even. It ended up being what I call a taco loss, stopped out for a 5-cent loss because we rolled over. But there were red flags on this bounce. As the bounce is playing out. Number 1, Bitcoin failed this 2-minute trend change. This was a biggie for me. If this bounce is going to follow through, we've got to confirm some trend changes. And we failed. We had a higher low and a fail at resistance, and then we broke short-term support. Big red flag number 1, the Bitcoin bounce is not following through. The other thing that we needed was QQQ to confirm this 5-minute uptrend. Right here. This is the same thing that was happening. Nice bounce, big pullback. All right, this has to be a 5-minute high or low. The stage was set. If QQQ confirms that 5-minute uptrend there, Riot's going to 1250 plus, probably going to approach testing the high of the day, and Bitcoin is going to see bounce follow through, just based on correlations. And we failed. QQQ failed the 5-minute trend change and hit a new low of the day. Big red flag. At that point in time, I'm pretty sure I'm going to stop out because the two things that I need to see for uptrend continuation didn't happen. And so we do end up eventually rolling over. I had an appointment midday, so I just set my stop, and that was that. And I stop out with my taco loss. And that's it. I was wrong. I didn't try again because I'm wrong. And so that is the ideal way of being wrong. What newer traders will do, and I'm sure some of the people that messaged me angrily did this, they make an entry. Oh no, it's not working. They make another entry. Oh no, it's still going down. They make another entry. Okay, finally the bounce. This might be it. I might get saved. Oh no. Where's your stop loss? What is your game plan? The likely answer is they don't have one. And so again, that's the differentiator between a small loss and being wrong by a small amount and taking a massive loss because you don't have a game plan for if you are wrong. I go into every single trade assuming I'm going to be wrong. If I'm wrong, I will lose this many dollars. I know from the get-go that roughly the loss that I will take, what I'm willing to risk on this trade. And if that's not planned in advance, then you're just winging it. So you have to lay out your game plan. What is the ideal scenario? Make a checklist. If you're not getting the ideal scenario, be patient and wait for the next setup. Use a smaller position size. There's many different ways to try and stay in control of the trade. And so now we'll see what tomorrow brings. And I will, because this is, if I took a fat loss, I'm not trying any more bounces this week. I'm done. I'm in timeout. But because this is a tiny loss, I'm absolutely going to give it another shot tomorrow, depending on what the setup is and where we see ourselves. And a lot of people say, well, what about you're playing counter trend? Well, I'm playing counter short-term trends, absolutely. But let's not forget, the last time Tesla set a monthly higher low was in the face of complete bear momentum. We had a downtrend on the daily, the hourly, the weekly, daily, hourly downtrend, and we hit daily oversold, and that marked a monthly higher low into an all bull move. And so that's my mindset when I'm looking at these plays, is I'm trying to position for a longer term move for a longer term trend. So Riot, what's the most likely scenario for Riot on the monthly time frame? For me, it's a monthly higher low compared to 942, at least initially. What's the most likely result after dropping 50% with no meaningful bounce on the weekly time frame? I'm looking for that weekly bounce, 44%. And we're also entering this support price action zone. So again, it's just different styles. And those of you that have been watching these videos ever since crypto 5 years ago, cannabis, for me, I make the vast majority of my money playing oversold bounces. Usually it's backburners in euphoria bull markets, but plenty of times it's just extreme historical oversold RSI levels. And KRE was an example of that. KRE was against all momentum and in part price action coupled with sentiment was all over this longer term 3-month reversal, which was counter trend. Just works for me. Doesn't work for everybody. I've mentored a bunch of people. I'm now rambling at this point. I've mentored a ton of people. Some people, even Lori. Lori doesn't like playing oversold bounces like me, and that's completely fine. As I was her mentor, I was the mentor of someone else who loves oversold bounces, and it's their bread and butter, just like it is for me. And it's just different preferences in trading style. XLV Healthcare lost the daily uptrend. If we drop down and break weekly support of 132, it's going to be our lead major bull sector joining Team Bear. And that would be a big win for the Bears, fending off the all-time high, which was closing in. So that's a key support level here on XLV into next week, 132. Can the Bears confirm the weekly downtrend? Every bear wants to see their weekly chart look like Netflix. Netflix, we knew a weekly lower high was the most likely result of the bounce due to the size of the pullback. We have confirmed the weekly downtrend. The break of 326 increased probabilities that we were going to confirm the weekly downtrend. Here we are, testing 400 psychological, but look at the 4-month chart on Netflix. There's a big upper wick forming, even the 3-month chart. Is this a 3-month lower high forming? It sure looks like it might be, and we may be in for a tightening range for a good bit of 2024. And so if this is the setup on Netflix, look at AMD. AMD confirmed a weekly downtrend. Is this a longer term 3-month lower high on AMD shaping up? The names that have confirmed weekly downtrends have higher probabilities of that being the case. The next question is going to be for everybody else. Meta, is this a 3-month lower high? Sure looks like it, but we've got to confirm the weekly downtrend next bounce. Apple, confirm the downtrend next bounce. Got a great start. Apple's not going to be a lower high because it hit all-time highs, but again, it's Netflix, Meta, Tesla. There's so many of these major names that have the possibility of shaping up long-term tightening ranges, a good bit of 2024, if not all of it, probably not all of it. And the question is, do we confirm weekly downtrends? Netflix did it, AMD did it, the bears are checking off the list on those names. Other names have not done it. And so they will have to do so if they're going to gain confidence as well. And SPY and QQQ will be the biggie if they confirm weekly downtrends next bounce. But for now, the bears still have their complete short-term control. And we're watching daily EMA 12 as our resistance guide on the S&P 500. And if we want the shorter-term time frames, the 4-hour EMA 12 has been a good guide the last couple days, last 3 days. Financial sector. So again, creating the space. If we confirm a weekly downtrend after the next bounce, this is a longer-term monthly equilibrium that we're going to look for a break of first thing, either to end this year or first thing next year. So bears are hoping for that monthly lower high to be set. IWM, growth names are getting smashed, and IWM is dropping because of that. It was the laggard bull move. You know, in May, we got that rotation into IWM and growth. Big gains in a lot of those real beat up names, but they are some of the hardest. They're selling off the hardest in this current market weakness. And so IWM, with that triple top, with a massive rejection and a ton of space for a weekly lower high, potentially a weekly head and shoulders next bounce. And so same thing as XLF. Are we shaping up a year-long tightening range here that's going to continue tightening up for another few months? ARKK free fall continues, daily oversold conditions. And again, just look how quick we go from overbought to oversold. And again, the signal was confirming the daily downtrend, losing the daily uptrend, stopping out the longs, the remaining runner longs, and then couldn't anticipate that we're about to free fall, but protected against it. And just euphoria to fear in 3 weeks. And so now ARKK also has a ton of space for a weekly lower high to be the result of the next bounce. So there's a lot of names where bears are going to be patiently waiting for those longer term weekly lower highs once this wave of fear right now subsides a bit. And we are seeing all of these sectors dropping together a number of times. It's not the kind of flush day where it's all day, trending day, bears have complete control of all major sectors. It's been interesting to observe because in the last week and a half, it's come in the end of the day. The end of the day moves are when all major sectors are hitting the low at the same time. So there's some puttering around during the regular or the morning into the midday, and then the end of the day is when they're all hitting together. And just showing that today, QQQ, so that big sell-off from 1 p.m. onward, XLF was hitting the low of the day at 2:45. XLV was hitting the low of the day at about 1 p.m. as well. So we didn't have all major sectors hitting the low of the day together until about 2:45 p.m. And that's happened multiple times where it's been the last hour and a half of trading where that has lined up for the bear follow through. PLTR confirming the daily bear flag. AI confirmed it yesterday. PLTR confirmed it in a big way today. Again, I keep saying it. The tops are in for AI names. And now it's a question of how much pullback do we see? Potential for a weekly head and shoulders here. Lower high space as a result of the next bounce. And look at the monthly chart. Monthly high or low is most likely, right? So we're not going to forget that. SPY, QQQ, Tons of names. Meta just broke an 8-month stair-step pattern bearish. So we're not going to forget that monthly higher lows are the most likely scenario. Right? I mean, that's what I'm looking for on this chart. But the question for me is, does it come after a confirmed weekly downtrend, or do the bears fail to confirm a weekly downtrend? That's going to be the next answer that we look for, bigger picture. And so QQQ, what's the most likely result of this monthly chart? Well, anything above 284 is a monthly higher low, which means we've got 20% of space to work with to form a monthly higher low. So again, that's another one of the reasons why I am looking for some of these oversold bounces on extreme names, because it is technically trading with the monthly trend and the possibility that they could turn into swing trades, but not at the moment. So AI following through from the weekly downtrend confirming on the daily bear flag. Again, big drop heading towards daily oversold conditions. A lot of these names will be daily oversold backburners as far as going from euphoria to first daily oversold conditions. So we'll be keeping an eye out for that as well. But again, only for the most aggressive bounce playing bulls that like that style. The dollar is still strong. We bounce off 12-hour EMA 12 yet again. It is still a possible rising wedge, but it's not the kind of rising wedge that I assume is going to break bear, because we're not getting much indication that that is the most likely scenario right now, as the bulls continue to buy the higher lows for now. So we're still battling this resistance zone, and the dollar is still strong, and that is keeping the metals still weak. Gold tried to get about, look at the 4-hour downtrend on gold. We have not changed the 4-hour trend in weeks, and we are just dropping as long as the dollar is strong. Silver has a little bit of a relative strength move trying to go here. Bulls are defending weekly support where gold did not defend it. But again, this is only going to last so long. We could say silver is positioned better if the dollar tops out, but silver is only going to be able to trade counter the dollar momentum for so long. Right now, silver is swimming against the stream of momentum that the dollar is going in. And as I mentioned, that can only keep up so long. Oil. Oil lost the daily uptrend. We've got space for a daily lower high to be the result of the next bounce. Can the bears confirm the daily downtrend? It's similar to Amazon and Meta and all these names that had a daily pullback. No major red flags. Confirm the daily downtrend. Things have shifted. So oil, the next step for the bears is confirm that daily downtrend into further weekly consolidation. And the energy sector, I drew this yesterday. Is this the right shoulder forming? Maybe. If we drop down and break 86.84, it will be the first daily confirmed downtrend in oil in almost 2 months. And it would be this head and shoulders confirming. Natural gas has been weak. Non-event day, daily inside bar, nothing really changing a whole lot. So nothing to say there. But overall, bears still have full short-term control. We are definitely reaching some fear levels, but we're not at extreme oversold conditions in the entire market. And this reminds me a lesson I learned in crypto, which is if a crypto altcoin is oversold and Bitcoin is not, then that altcoin can get extreme while Bitcoin gets oversold. And so right now, it's the lesson for me today was, yeah, Riot's oversold and Bitcoin's oversold, but the broader market is not that beat up. And if it's going to head to daily oversold, then these names are going to get to extremes. And so QQQ is going to dictate a lot for when these names bounce, in my opinion. And again, it's just the hourly downtrend as the bear control guide from here. Next swing trade bear setup. A lot of space for daily lower highs on a lot of names. So bears will be looking for daily lower highs. Determine in advance. Are you going to look for daily lower highs as a bear? Are you going to look for weekly lower highs as a bear, more patient? Are you going to look for daily bounces as a bull? That's only aggressive. It's difficult to do. Only if you really like bounces and you've been working at it. And again, it's the kind of thing as well where a patient bull can wait for a big enough bounce on the daily and then say, okay, that's big enough for me to scout the higher low. And then have the level to play off of and say, we're either going to change the daily trend after that bounce, or I'm going to be wrong. And we haven't had a bounce big enough to be confident that a daily trend change is going to shape up. These have all been weak bear flag bounces. So it would require a multiple day bounce to try and create the space to eventually try and create the trend change. But at the moment, 4-hour futures EMA 12 resistance is our guide. And we're heading towards daily oversold conditions as the bears are gaining some confidence. As always, protect your trades. You're going to be wrong a lot. A lot. Protect when you're wrong. Be wrong by a little bit and right by a lot. That's the ideal name of the game. I know it's harder than it sounds, but stop losses are your friend. Appreciate you watching. Too long a video, no end of the day content. Do good things. I'm going to do a longer term video for Chart Guys members over the weekend, talking about a lot of scenarios that I just briefly touched upon. I'll see you all there.